CPI came out this morning. Inflation is hotter than expected. So let's get to it and let's look at some of these things. Like I said, slightly above estimates, which let's see how the market's reacting actually. What is the market doing right now? We are down a little bit. I think that this has a lot to do with the hurricane that happened actually, because we have not seen any change since really these reports came out. Now, let's see what the report was. A closely watched report in the United States. This is the thing that everybody is just waiting on. Why? We're talking about interest rates here. I said two weeks ago, I said cutting interest rates is a mistake. It's purely political. It's going to cause problems. We are still in too much of an inflationary environment to be cutting interest rates, especially by 50 basis points. And here, data is just going to start coming in like this. I'm telling you right now. CPI increased 2.4%. Over the prior year. It was up 0.2% over the previous month. Let's get into what exactly increased here. So this is a breakdown of the detailed numbers. So food, let's see what food did. Food was up 0.4%. Over the last 12 months, still up 2.3%. I think this is a lot higher than people think. I mean, I don't go to the grocery store. Nicole goes to the grocery store and I see the bills. Food is still expensive. You guys could probably vouch. Food is expensive. I don't understand how you can go in and buy 6 items and spend $100. That is not a sustainable environment. Okay. Next, energy. Energy is down. Of course, they strip it out, but energy is down. Gasoline is down. That's what you're seeing. Now, utilities. Utilities are all up. You see electric's up. You see gas is up. Let's see. New vehicles is back up. What was this big one right here? Apparel. Up 1.1%. It's a discretionary item, but that is a very big number right there. Transportation services. I don't know if you guys have been traveling on cruises or airplanes or buses, what have you. It is pretty crazy out there. So if you really look down this 12-month number, this is over the last 12 months, energy is significantly down, right? But if you take out energy, used cars is significantly down, but remember where used cars were. Used cars were like double. It was almost up 100%. And if you just start looking at some of these numbers, food away from home, meaning restaurants, still up 4%. Food at home, still up 2.3%. That's a really big increase. What else do we have here? Medical. It was medical. Medical's up about 4%. Transportation services up 8.5% over the last 12 months. Shelter, probably rents, etc. over the last 12 months, up 4.9%. Medical commodities, apparel still up 1.8%. So when you start looking at these things, you say, okay, inflation is still there. I understand the goal is 2%. Whatever the hell that means. I think they're at 2.4% right now. Let's see what the Fed Watch tool is sitting at. So this right here, for those of you that don't know, is basically what the market's prediction of where interest rates are going to go in the future. And this is looking at the November 7th, 2024 meeting. So that is a little bit under a month from now. It's actually 2 days after the election. So the election is on the 5th. That's on a Tuesday. Wednesday, okay. Here's the big thing right here. Guys, and I want to get down into these numbers down here. Right now, current interest rates are sitting at 4.75 to 5%. Because we cut 50 basis points. They were at 5.25 to 5.5%. Cut at 50 basis points. Now, there is a 13.1% chance that we are going to stay at this number. Why is that important? Why am I bringing that up? Well, if you look back here, just a week ago, right here, October 3rd, there was a 0% chance that we were going to stay the same at current interest rates. There was a 68% chance that we were going to get cut by 25 basis points. 32% that we were going to cut by 50 basis points. So the market a week ago just said, we are not going to stay the same at rates. And now that shift has completely happened in the opposite direction of what the market is thinking. Now, I guess the consensus is that we're going to get another 25 basis point cut. I'm surprised this number's where it's at. Guys, let me take you back to the 70s. Maybe some of you weren't alive. I wasn't alive, but I've read about it. In the 70s, we had what was called a double dip recession. So Jimmy Carter was president. Inflation was going crazy. Interest rates for mortgages were like 17%. And you were probably sitting there being like, that's insane. Yeah, it happened. There was like 17. I think my dad, he bought his first car in the late 70s, maybe early 80s, and his interest rate was like 19% or something like that, the borrowing rate on his car. So when you're looking at this, a double dip recession, here's what happens. You start taming inflation. Inflation looks like it's coming down. So this is inflation. Looks like it's coming down. Everything's good. Everybody's happy. It's starting to creep down. And then what do you do with the interest rates? The interest rates were high, right? I'll put IR right here. Interest rates were up here. And so what do you start doing with those? Well, you start trimming them down. Why? Because inflation's coming down. But is it really coming down? I think that what they started to do last week, first of all, I don't think interest rates were high enough. That's my personal opinion. If you really wanted to fight the inflation that was happening out there, whether it was from COVID, whether it was from doesn't matter what it was from, we had it. You have to tame the inflation. You can't, guys, if you look at the historical interest rates out there in the country, 5 to 5.25, pretty normal. That's what it should be. We have just been brainwashed to think that 0% interest rates or 1% Fed fund rate is the new normal. It's not the new normal. You have to have a moderately high interest rate for things to work. It's the push and pull of the economy. 0% is not the standard. Honestly, when I look at Trump saying that he's going to start cutting interest rates like crazy and probably getting it back down to 2, 1, 0%, that's absolutely stupid. Absolutely stupid. It makes zero sense. You do not want to have a zero interest rate environment. That is not a healthy economy. Look at Japan. Japan has been a disaster for the past 35 years. Why? Because they've been stuck in the zero interest rate environment. So going back to the 70s, high inflation starts coming down, people get excited, interest rates start coming down. You start cutting interest rates too quickly, meaning you go from 5.25 to 5.5 down to 4.75 to 5. Then what happens? Inflation starts to rear its ugly head. And what do you do with interest rates to play catch up? Well, you're sitting here at, let's call it 4.75. 4.75 is where we're sitting right now. I cannot draw this morning. Well, what are you going to do? Maybe you're going to jack this up to 5.75, 6%. Why? Because you're going to try to curdle this big jump in inflation that's happening. That's called a double dip recession. Because the environment just becomes so unbelievably difficult to live in, double dip recession. And I do think that we're in a recessionary environment right now. You don't really know you're in a recession until you're out of the recession. It's 2 consecutive quarters of declining GDP. But that's what I fear right now. That's what I think is going to happen. I do not think this is a wise decision. And I think all of these numbers that came out this morning is exactly pointing to that. I think the 50 basis point cut that we did last week or 2 weeks ago was purely political. I think that this is purely political. I worry. Well, there is one way out of this. We just print. I mean, let's say that we get into a double dip recession. Let's just print the hell out of it. What does it matter? We might as well keep doing it, even though they won't print money for FEMA. But that's besides the point. But let's get into one more thing. I wanted to break this down. This looks interesting, right? It looks really good. Looks like they've really tamed inflation. Remember, we were up about 9% around 2022. We're trying to get down to this 2% number. This is kind of the goal right here, 2%. Will we get there? I don't know. If you cut interest rates, no, I don't think you're going to get there, especially if you cut interest rates quickly. Now, one more thing I want to look at real quick. Look at this. This is from Bloomberg. Jobless claims jump 258,000, exceeding estimates. There is a big push and pull when you're thinking about inflation, when you're thinking about interest rates. You have to think about the unemployment number. Looking at the unemployment number, we still have very low unemployment. Is it higher than the past? Yes. But there is, again, it's like the zero interest rate environment. There's a healthy balance of having a relatively high, stable unemployment number. Not everybody can have a job. Not everybody is employable. And at this point, the unemployable are being employed. That's not a good situation to be in. So this whole thing about interest rates and unemployment and inflation, it all works together. It's not just we do this happens. No, there's all of these wires being pulled. It's like a marionette. There's wires being pulled from everywhere. If you want to hit that balancing point, everything has to be firing on all cylinders. And I can assure you, we are not firing on all cylinders right now. Guys, I want to hear your thoughts. Are we in a recession? What do you think about inflation? How is it affecting you? Put your comments in the video below. Subscribe to this channel. I'll see you on the next one.